The triangle pattern. One of the most popular trading patterns ever used in the trading community. Like, no, really. Our great stock ancestors have been using these in technical analysis forever.
Oh, the pioneers used to ride these babies for miles, and it's in great shape.
And there's definitely a reason for that. One, it's a very easy pattern to spot. Just two simple trend lines that come to an apex. Ah, beautiful. So I'm sure you've used one before, but this video isn't about what a triangle pattern is, it's about my secret tips I use myself to absolutely take advantage of this one simple pattern. I'm going to be sharing different ways you can optimize this pattern and insanely benefit from it. And I'm going to be honest, if you were to use these tips yourself, this just might happen to you. All jokes aside, if you use the triangle pattern, this video will definitely help you out a lot. Let's get straight into it. So to start us off, the triangle pattern can come in three different variations. The symmetrical triangle, where it's symmetrical in shape and not really trending in one direction. Then there's the ascending triangle, where price action will slowly start moving in the upwards direction. Then of course you have the descending triangle, where price action will slowly start moving in the downwards direction.
Well, I got my triangles.
So my very first tip involves the apex point, which is where the two trend lines meet up. In most cases, you never want to enter a trade if price action goes beyond the apex point. The whole reason why the triangle pattern is so good is because of the trading momentum that happens inside of it.
I'm building momentum, man.
All of this tension is building up, so once price does break the trend line, it moves insanely fast and has a lot of momentum behind it when it breaks out. If price never breaks the trend line and then just moves sideways into the apex point, all of that tension is now lost. And it'll be extremely hard to predict price movement afterwards, as the chart will start moving sideways. My next tip is an absolute game changer, and if you use the triangle pattern, this will completely open your eyes. But first, check this out. I found this private indicator called Chart Prime. What it does is automatically draws the chart patterns for you. It can do channels, pennants, wedges, everything. You just download the indicator, add it to your chart, and select whatever preset size you want the pattern to be. The larger the preset, the more the indicator will go back in time, and the larger the actual pattern will be. You can also manually change the sensitivity or deletion period of the candles if you want to be a little more exact with the patterns and not use a preset. Once you play around and find a preset you like, the indicator will automatically draw all the patterns for you whenever one is created on your chart. Once you see the lines drawn on your chart, the indicator will actually automatically notify you with an X to let you know the price is breaking the pattern. I mean, this indicator basically does all the work for you. It's basically a Roomba, but for trading patterns. This indicator is great, and I'd absolutely recommend it to anyone who uses patterns when trading. If you're interested in the indicator, I'll leave a link in my description. Back to the tips. Now, this next tip is a game changer. You can actually use the size of your triangle pattern to predict where to set your take profit. A lot of the time, a triangle pattern will go up or down the amount based off its size when it breaks out. So what I mean by this is, say if you have an ascending triangle pattern that is 100 pips, you can set your take profit 100 pips from the breakout. A lot of the time when price does break out, it'll hit this take profit with ease.
Oh, well, that was actually easy.
Same thing goes with descending triangles. Just measure the size of the triangle, place that measurement where price breaks downwards, that's where you place your take profit if you wanted to short. Here's a real example. So you can see a triangle is forming here. Price action is slowly starting to accumulate more and more momentum. Once that momentum builds up so much, it breaks the pattern. So we grab the rectangle tool, measure from the low to the high of the pattern, then place this at the breakout point. Now we have our take profit level, and look what happens, price hits it with ease. Here's a short example. Price is building up downwards momentum, breaks the trend, we measure the pattern size, plot our take profit point, and look what happens, price gets there. It's really that easy. Don't be surprised if price goes a little past your take profit point, as it will happen sometimes. But as I always tell my premium members in my Discord, don't get greedy. It should also also be said. Triangle patterns on higher time frames like the daily or weekly will be way more predictable and will have a higher win rate, as it takes a lot more volume to create these, so they will be a lot more reliable. Also, the profits will be a lot bigger, as the triangles themselves will be bigger, so it's really a win-win situation. Now, don't get me wrong, they will also work on lower time frames as well, but like I said, they perform a lot better on the higher ones. One of the biggest problems with trading patterns is false breakouts. Next, I'll be going over some secret techniques I use to help avoid false breakouts. To find that out, watch this video. Thanks for watching, and I'll see you guys next time.